No one knows what the future holds, but if a new house is in your future, I can help from a safe distance. I'm Nick Acosta, your downtown expert, and I'm hosting safe and sanitary open houses. Nothing is different except for temperature checks at the door and masks are required. But it still smells like there are fresh baked cookies in the oven. So come on by one of my safe and sanitary open houses, and I'll say welcome home from 6 feet away.
This is Home2All, an all-inclusive real estate podcast with your host, Nicholas Acosta. Nick sits down with guests to talk about real estate and how it works. Reach him at downtown.expert on Facebook and Instagram, or his website, www.downtown.expert, or call or text him at 407-508-8809. Enjoy the episode.
Hello, everybody. This is Home2All, an all-inclusive real estate podcast coming to you live here Friday, September 17th at 2 p.m. We've got Blanchard Insurance, Mike Synthetic. Mike, how's it going today?
Hey, good, Nick. How are you doing?
I'm doing well. What's going on in the world? Let's talk about real estate and the market right now, and also how the impact is on insurance as well, of course.
Yeah, real estate market from our perspective on the insurance end is still booming. We are still busier than ever. I thought last month, kind of the tail end, it slowed down a little bit, but that's what happens every time people are taking vacations and kids are going back to school. Closings were kind of getting pushed back. A lot of deals were falling through. It's kind of one of the trends that we noticed, but this week it's kind of kicked back up like it really hasn't missed a beat at all. I mean, you're seeing construction continue all over town, especially here in Orlando and Central Florida. You're seeing that continue, whether it's down in Lake Nona or even up here in Seminole County. I mean, the vertical living trend is continuing with the apartment buildings and condo buildings going up everywhere. And you're seeing, again, the influx of people from out of state moving into Florida and buying up the properties. And you're seeing the sellers not really batting an eyelash or hesitating to pull the trigger right now for the offers, and the numbers are getting, coming out. We've had a few members on our team put their houses up for sale and are like, hey, I'm going to go rent for a couple of years and speculate and prospect what the market does. If it drops off in 2 years, I'm out 1 or 2 years of rent, but I can probably get a deal. And what am I going to do with the gains I made on my property so far? Well, I'm going to invest it in retirement, or I'm going to take a nice long vacation.
Yeah, we're seeing that trend still happening here. Things are going vertical, and every single day they keep announcing, the city keeps approving of St. Pete, keeps approving new buildings going downtown St. Pete. So that hasn't slowed down one bit, despite the fact that lumber and construction costs have gone way up. And it's just crazy that it hasn't slowed down. And do you see, I have a feel, my prediction is that at some point this has to slow down, whether it be interest rates going up to slow down the rise of prices or make it a buyer's market again. What are your thoughts on that too, Mike?
I think interest rates have to go up. I think long term, the government is getting sick of handing money out. I think the handouts, I think, are going to stop at some point, and they're just going to say enough is enough. We got to raise interest rates. So we got to make money back somehow. We're seeing that even on the insurance side with, flood insurance. And the government program in regards to that. But in real estate, I think interest rates have to go up to kind of balance it out. It's ridiculous right now. Will it impact Florida as much as other states? I don't know. Your guess is as good as mine, but I see a lot of people, a lot of Floridians kind of entertaining the idea, like I said, of, hey, if somebody's willing to move to Florida from the Northeast or the Midwest and pay me all this money for my home, and Georgia, Ohio, moving there, New York, doesn't really sound like a bad idea to me. So maybe that will slow down, the market a little bit. But I agree with you 100%. Something has to give or bust at some point in time.
Most definitely. And you brought up a good point that everyone listening or watching today, that it'll be really tough to see how it reacts in Florida because, as you know, and everyone knows, if you guys don't know out there listening today, but Florida is a unique market for sure. So what happens in other states, like Mike was talking about, like New York or Ohio or Georgia, um, those you can't compare that to Florida because Florida is its own animal, so to speak. We have theme parks here. We have the beaches everywhere. We have waterways. We're in paradise. The weather is pretty much the same year round versus like up north where you have different seasons. But it's going to be hard to see, or it'll be tough to see what really happens in Florida because it might slow down a little bit, but I don't think it'll slow down completely just because we're booming right now in Florida. So
Yeah, and the retirement element of it, the retirement community and the baby boomer generation kind of supplements a major dip. I think that the industry and the market would have that really wouldn't affect Florida because you got to remember. I mean, I was driving up to Georgia, about a month ago, I should say. I think it was close to last time we talked, and I was amazed at going up. What is it, 75? I was amazed at the amount of new construction that was still going on in the villages. I mean, it's always going on. Let's just leave it what it is. They're always building there, but the scale it was insane. And I was talking to an uncle of mine who actually lives up there, and we were kind of remembering back to 2008 when he built up there, and it was like $80, $60 to $80 per square foot. He was telling me construction costs for what he's seeing up there now on a new build is about $200 per square feet. And I mean, up in the villages, I mean, it's not like you think at $200 per square feet, square foot, they're building something nice. I mean, the homes they're building in the villages haven't changed. I mean, they're saying lumber and construction costs have gone up, but you're still getting that 2,000 square foot frame house that's cookie cutter. And guess what? They're replicating, 30 more, are going up in the same day. So, you're seeing that. And I don't see that slowing down any. Maybe there will be a dip in another 10 years or so in regards to that when we see kind of, one generation transitioning into retirement, from another. You might see a little bit of that and it might slow down. But again, I mean, the baby boomers are just feeding Florida. They're keeping the market hot. And I don't see that, slowing down anytime soon.
now with, people that are opportunists out there, and this is getting into fraud and with insurance. Now, with the market booming the way it is and, getting inspections done, do you see this have you seen an increase in kind of claims, like fraud claims possibly, when it comes to roofing? Because you would expect that as people get houses inspected that, roofers in Florida would look for an opportunity to make money off of somebody's new purchase when they move in their home.
Yeah, absolutely. I mean, that's the main with, past podcasts, and every Floridian knows this right now with going on with the free roof tax, which is not really free. We're all getting taxed for it in one way, indirectly in one way or another. But, these free roofs that everybody's getting, yes, we're absolutely seeing, whether it's the buyer figuring it out. I mean, that's the biggest contention. It's like, Nick, if you're selling your home and I'm going to buy your home as the buyer and your roof's 20 years old and it's making it impossible for me to get insurance, or it's going to make the insurance premium so stiff that I want to back out of the deal. There's nothing preventing you from actually going and talking to a roofer, and the roofer going, yeah, let's file an insurance claim real quick and get you a free roof. You may have to delay putting your house on the market or take it off the market for another month, but let's get that free roof for you to sell your house. Well, indirectly, what that's causing is it's part of the construction inflation that we see going on. So it's not just the new construction. So when a roofing company right now, and mind you, if you're getting a new roof cut on, you can get a bid. Anybody will write a contract and sign a contract on your roof in 24 hours. Work may not commence for the next 1 or 2 months. I mean, that's how far they are booked out right now, because they're also working. It's the same outfits are working on new construction as they are on these roof renovations. And they're essentially saying, well, we're getting paid from the insurance company no matter what. So it's kind of like almost a upfront guarantee of payment. So you're seeing that, and that's how, yes, obviously that's having a factor into driving lumber and construction costs through the roof as well, and supply costs. So you're seeing that indirectly. Absolutely, yes.
Most definitely. I mean, another thing that I mentioned to you before the show, and people probably saw that in the news today, there's also been an increase in renters in the suburbs now. I mean, do you see that trend because insurance costs are high, or I mean, it's probably just a combination of the construction costs going up instead of people buying new houses or buying a house, they just foresee themselves renting versus buying now. Is that maybe that's part of the bubble burst that's coming?
Yeah, I think that does have an impact. I think it's uh, a minor factor in the overall impact. I think the major impact again is still like, hey, guess what? My property value is continuing to go up. It's gotten to a point where, yeah, I mean, renting someplace is a lot. Even though rents are high right now and really, really high, they're taking a look at it and going, well, it's getting to a point where it's kind of out. It's do I sacrifice my mortgage payment, rent, which way works best? Well, the money, even though I may be paying less on my mortgage, the money I'm going to make off this deal is looking a lot better to me than, by selling my house. And again, they're waiting out the market, 1 or 2 years to see. And yes, do insurance premiums have a factor into that decision making? Absolutely, because we've seen people who are living in fairly decent sized homes. I mean, the premiums going up for them, let's say $1,500 to $5,000 easily in certain locales, especially when you get over on the Atlantic coast, or you get over there where you are in St. Petersburg and Tampa. So it is a factor. I don't think it's as made. I think it's probably factoring 5 to 10% of their decision making. And the main thing is like, hey, I can cash out and get my money, put it into my 401, my retirement account, or again, take a long vacation on it. And I think that's generational too. I think we're kind of seeing that, especially in my generation, where I will say my kind of like Generation X, a lot of us, me included, I wasn't, investing and saving, in my 20s. I was out spending money and, like there was no tomorrow and enjoying life. So I think a lot of us are going to habitually playing catch up. So I think a lot of Gen Xers and even millennials at this point are taking a look at it and going like, now's a good time to replenish my retirement account. So it's a really great opportunity. So why not take advantage of it? Because it may not be here tomorrow. Maybe I'll use this money to start a new IRA or whatnot. And they're also looking at it into, I know we talked about this during pre-show, with a lot of people going to work remote. A lot of people are sitting at home, and and kind of the psychology behind it is people sitting at home going, I'm in a corporate job. You got a lot of time to think, and you don't have a lot of distractions. So they're thinking about it from, do I really like my job? Do I really want to do this? Do I cash out on my house? And we've seen this, mind you, with clients where it's kind of like quit their jobs, sold their house, made $100,000, if not more, and gone and invested in a food truck or a camper and driving across country, selling stuff on Etsy, and completely changing their lifestyle altogether. So I think that's also a factor that we're seeing that is going to affect the housing market, down the road. And I think that's all attributable to COVID when it comes back to it. I think COVID actually contributes a lot. We don't know how it's going to factor. People say, yes, it's factoring in everything we do, on a daily basis in our lives right now. But we're not really looking at the long-term impacts of that. Like, so for example, people switching careers, how does that affect the real estate industry? And again, we're not going to have true studies on that for another decade or so, but it is kind of interesting.
No, that's true. Usually we don't know how it was impacted until after it's behind us. So
unfortunately, yes.
Yeah, exactly. No, I would say, yeah. So with that, I was just going to find out. So, is there with the COVID thing, obviously, like, what else is there out there that's, like the insurance wise, besides the roof and stuff? What other things are going up, like for insuring like pipes? Like, we all know that I went through my mold claim here, which finally got constructed. And because of COVID stuff, it took a lot longer than normal, plus also waiting for the insurance to get back to me to pay me, which is not the insurance fault. It's just, in general, everything's moving a lot slower because there's a lot less employees. But what else do you see impacting the housing market when it comes to insurance besides just the roofs or people taking advantage or what other kind of fraud, I should say, from insurance besides roofing?
Well, the big thing that's going to impact Florida, and I haven't heard anybody talking about this, and nobody ever does, is flood insurance. And almost everybody out there has no idea, unless you are in the industry and you sell flood insurance, you have no idea that this is going on. Well, effective October 1st, they're doing this new program, and the government's calling it Flood 2.0. And most people don't realize, I was actually having a conversation earlier today with somebody about this and telling them, like, most people don't understand the National Flood Service renews that program on a yearly basis. It's not something, and they've renewed it for the past 50 years, but sometimes they shut it down. They won't even approve it. So when it comes to, it's one of the last things on a bill, that Congress decides, hey, are we going to renew this program or not? They've let it lapse for a day. They've let it lapse for a week at times, and they keep extending it, hey, we're going to extend it for another 30 days and blah, blah, blah. But people don't know that it comes up every time Congress goes in this session, they decide whether they want to keep that program or not. They've kept it for the last 50 years. The other thing that people don't realize is that program is about $50 billion in debt. So if you average out that it's been around for 40 years, you can do the math and see every decade how much money they are losing. And that's contributable to everything from Hurricane Katrina to Hurricane Andrew to Superstorm Sandy, which is, I believe, the biggest to date. Hurricanes in Texas, recently Ida, flooding. So the government's shelling out all this money, and a $50 billion loss over 50 years is still a huge loss. That would bankrupt most major insurance companies like State Farm, Geico, or Progressive overnight. And the government's fitting that bill, and the government's just allocating funds from other places to keep that program alive. So finally, the federal government, FEMA, basically decided, we need to really seriously take a look at this and raise rates if we're going to keep the program going. So generally speaking, even on your house, Nick, so let's say you live in a preferred flood zone over there in Tampa, but it's you have the option, well, I don't really have to carry flood insurance, but I'm Nick, I'm smart. Basically I live kind of on a peninsula here. I'm not too far from the ocean. I better get flood insurance. That whole area of St. Pete should have been a flood zone. Some of it is, a good majority of it isn't. It's just the same thing as Main Street and Daytona Beach. It's not considered a flood zone. It's what they call a preferred flood zone X, where they're literally taking in under $500 a year to insure your house against a risk. The average flood claim in the United States is north of $60,000. I want to say it's about $68,000 to be exact. That's the average flood claim in 2021. So the federal government's looking at it going, well, we're only charging Nick $500 a year, and there's a good chance at some point a Category 5 storm surge, Nick's going to get flooded. But we couldn't take in enough money in 10 years to even offset that cost. But what it's kind of what they did with those flood zones was saying everybody in a flood zone X pays the same rate as Nick, regardless if Nick lives in the middle of Oklahoma, or he lives on Colorado on top of a mountain, or he lives in Alaska or Hawaii, whatever, Nick is paying the same rate as those people. What they decided was, we still, even after all that, we can't take in enough money to support the program because, the guy in maybe sitting on top of a mountain in Colorado doesn't want to buy flood insurance. So what they needed to do was look at Nick's home individually, and they're going to look at Mike's home individually, and they're going to look at everybody else's home individually and say, well, guess what, Nick, because you are in St. Pete, you probably need to pay more flood insurance than Mike over here in Altamont Springs. So what they're doing is they're raising your rate higher than raising mine. But Floridians need to know, and all the realtors need to know out there, that these rates, probably about 70% of the rate increases are going to be in Florida. Florida is, if you look at anything on FEMA, National Flood Service, III.org, anywhere where they have stats, Florida is the top of the list by far, by miles above anybody else in any stat you want to know about flood insurance, as in frequency, as in payouts, as in risk. Florida's number one. So that's why you're seeing all the rates are going to come to Florida. So again, it's not going to matter. They're looking at everybody individually now. So it's not going to matter what flood zone you're in. All those everything you saw on the flood certificate, where it, the lowest adjacent grade, highest adjacent grade, base flood elevation, all those things, you can use them, but they're really throwing them out the window. And they're taking a look at historical flooding maps, heat signatures, and everything else with climate change, and going, well, Nick, even though you haven't had a flood history, we're predicting in the next 5 years there's going to be a flood and it's going to affect you. We're going to charge you money for it. That is coming down the pipe October 1st by FEMA, by the National Flood Service. And then that's for new people buying new properties and getting new insurance. And then April 1st of next year, where it's going to affect everybody's renewals, like my insurance, your insurance, whenever the policy renews, next time you're going to see the rates. Now, that begs the question, is privatized flood, which is outside of the national flood insurance program, going to be more affordable? Is it going to be more competitive? Are there going to be more players in the market? The answer is probably not, and it's probably going to stay the same, because again, the private flood companies are still going to look at St. Petersburg and go, yeah, Nick, we're still not going to insure you because it's a low-lying area, it's next to the water, so we're still not going to offer a coverage. So in a lot of those cases, the only option still you're going to be able to have is going through the National Flood Service, and they're going to really dictate the pricing if you want to carry the coverage or not. Then it brings into the question, does the National Flood Service, if the program, if they raise all the rates and nobody signs up for it, nobody pays it, blah, 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 everybody's going to be like, I can't pay it, I'm just going to go without insurance, as some people do. What happens? Does it crash the program? And what happens at that fact? Well, if it crashes the program, there's no flood insurance. Mortgage companies, what do? I don't know. They come up with a solution and just say, Nick, I'm going to charge you $10,000 a year to put away in the escrow just in case, there is a claim. We'll use that money to repair your house. So nobody really knows how it's going to affect it long term. But again, it goes back to the fact that the program lost $50 billion in the last 40 years and has been underfunded from day one. The data that they have has been so inaccurate, outdated maps. And they're just starting this with the new technology they're using to look at, they call it single risk modeling, but looking at your house as an individual specimen. The technology is still not there yet. I mean, it could be off by showing flood maps off by 50 yards or more. So they really, truly don't know. And it's going to take years and years of technology and engineering, new surveying to work out. But again, everybody is going to be surprised by this October 1st.
Most definitely. So just to that point, north of me is Lake McGorry, which is a massive lake that looks like an ocean that faces downtown. And to the south of me, there's a creek. Plus, there's also the bay. So if either the lake or the creek were to overflow, which they do have, lift stations.
Yes.
Right, for all of them here. Now, if those lift stations were to fail and we had a bad enough hurricane and a lot of rain for a couple of days, even though I'm in an X flood zone, according to the government, the water of the lake and the water of the creek would meet in the middle, right in the middle of my house, because I'm not that far from either one of those bodies of water. And It doesn't matter if there's a hill there because it's Florida, so we're still really low elevation to begin with. So, and when we have torrential downpours, which they also claim that that's part of climate change, the torrential downpours, there's at least an inch of water standing on the ground, and we just have a short burst of rain for 30 minutes, let alone if it was a hurricane and there's storm surge on top of the rain, then we would definitely, unlike the fact that my house was engulfed in mold, about half of it, I could definitely see that it's important for me to have flood insurance because the house could be underwater in a bad storm, for sure.
Yeah. I mean, and most of the reason they're raising the rates in Florida and like why a majority of it's going to be in Florida, I mean, you could make the argument, well, Superstorm Sandy in New York recently because of Ida had flooding, and Louisiana obviously has been nailed the last few years. And, I'm surprised, they're going to even sell, and that's another topic altogether, but, about Louisiana. But why are rates going to go up in Florida if the problems they seem to be in Louisiana and New York and New Jersey and everywhere else in the country? Florida doesn't seem that bad. Yeah, because it really hasn't happened yet. Yes, we've seen flooding in the Keys. We've seen flooding in Miami. We've seen bad flooding down there. We really haven't seen it in Tampa. We really haven't seen it in St. Petersburg. We haven't had a direct hit by a Category 5. Well, what do people think is going to happen if Hurricane Michael hadn't hit Mexico Beach and had hit Reddington Shores, Longboat Key, and all those areas, do you not think you would have seen the same thing happen that you saw in Mexico City Beach? Absolutely, you would. It just hasn't happened. They're betting on what happens if Jacksonville gets hit. And, even going back to like Tropical Storm Faye, I believe it was in 2008. I mean, we were seeing DeLane and Deltona were flooded. I mean, areas out there, and I'm like, well, that's elevated. How the hell did that get flooded? Yes. If a hurricane pushes a storm surge or stays over Florida long enough, it causes flooding. I mean, even during Hurricane Matthew, they had water all the way up to I-95. I mean, the Speedway, the interior grounds of that was flooded. People don't remember that, and they think, well, it can't happen in Florida. Absolutely, it can, and that's what they're predicting is it is going to happen at some point in Florida.
Yeah, I think the misnomer in Florida is that since don't have mountains or hills or valleys, that everybody assumes that when it rains or when there's storms, Florida's flat, so all the water is just going to go right into the bay or into the Gulf and the Atlantic, and that's it. But that's not the case, because I'm from here, and when I see a thunderstorm like we had one this morning, and it's supposed to be raining again this afternoon, but when we have these torrential downpours, which we didn't have these when I was a kid growing up here. It wasn't a torrential downpour. It was a rainstorm, but not the amount of water that comes down now. And like I said, literally about an inch sitting in my driveway of water just from a torrential downpour. And even like going back to Hurricane Matthew, as if people that may have forgot about it, I know you didn't forget about it either, Mike. I didn't either. But that storm wasn't even that didn't even fully make landfall. That was just gliding across the coast.
Skirting the coast. Absolutely.
The coast. And it would have been 10 times or 20 times worse if that did make official landfall over the state of Florida, compared to, even though it did a lot of damage skirting the coast, that is. So, and
that would have been, again, I mean, like when we're talking about the average claim, I mean, you just went through a water claim. So we're looking, and yours was actually higher than average. I mean, it caused a lot of damage. Well, if the average flood claim is 3 times that, people can only imagine, take a look at what Nick went through and then times that by 3. That's your average flood claim. And I mean, it causes a lot of damage, and that's, what it is. But the other parts of the program aren't really changing. So for example, they're still going to offer you the $250,000 coverage on residential properties. They're still going to offer you $500,000 on the same policy on commercial properties. The deductibles there will be more flexibility on insuring your contents and whatnot, but the program is essentially staying the same. They're just raising the rates and how they determine those rates. Now, again, going back to the private flood, and there's going to be a lot of agents out there, insurance-wise, and realtors, and people pitching the private flood insurance market. Well, again, the private flood insurance market is a little bit different in they can opt in and have these co-insurance clauses. They can do actual cash value. They can really depreciate a claim and cut it in half and literally overnight. They may have different exclusions on the policies. It's not a federally regulated program. If you can compare it to something, it would be like, you're buying an unconventional loan. You're buying something that's, not an FHA. You're buying something that has really no regulation on it. And again, the federal government is probably always going to pay at the end of the day. When you get in a private flood, a lot of these companies could just bankrupt themselves overnight, which is not out of the realm of possibility. And, they're not going to pay as fair as the federal flood service. So in my opinion, until the private flood market can be around for a lot longer and kind of stand the test of time, pay out more claims, then yes. For example, up in Mexico City Beach, Panama City, and all that, when Michael went through, guess what? I can guarantee you none of that was insured by the private flood market. If you tried to write a private flood policy up there right now, they would say, hell no, we're not even touching that area. They probably said the same thing before it hit. They're not going to do it before and they're not going to do it after. So it's not tested. Now, if the private flood market had been up there and they had paid out all their claims and, stayed financially solvent through it all, I'd say, yeah, private flood is probably a good thing right now. But again, it's kind of like these homeowners markets that come into Florida like overnight and say, hey, we're charging everybody $500, for a homeowner's insurance policy. We're a great company. We've only been in business for 1 year in Florida, blah, blah, blah. Oh, guess what? It's not enough time. It's not enough data. You have no loss experience. How do we know you're going to be there, the next day?
Well, and before we go, I thought about this too. What you said earlier, Mike, that rang true to me is I know that they're going to obviously be adjusting these rates for flood, but something that came into my mind is as these prices or values in Florida continue to go up and these mortgages get larger and larger because the prices are going up, that I wouldn't be surprised. And sometime we could probably invite we should get a mortgage broker on. I have one in mind, but if you have one too, that'd be great to be on our show one time. But mortgage companies probably in the future, or banks, even with the flood insurance required, that as these prices go up and these mortgages get larger and as climate change happens, that maybe one day the mortgage companies, well, kind of, it's a bummer, but that they would come up with some kind of subsidy, additional escrow in addition to what you were talking about, to cover the difference of what flood insurance pays in case the damage is more excessive than what the policy allows or whatever it may be.
Yeah, I see down the road, and I've always said this for going back as long as I can remember, that probably the National Flood Service, National Flood Program, FEMA, whatnot, should be a backstop for the private flood market. It should act as reinsurance where, guess what, if there is a hurricane that comes through, it should be like hurricane insurance or wind insurance, where the private flood would be responsible for 25% of the claim, and then the government picks up the other 75%. Same thing works in terrorism coverage after 9/11, where the private insurers were like, hey, we cannot pay this risk, we'll go bankrupt. So the federal government stepped in and said, okay, well, we'll back up your claims. You only pay out a smaller percentage. If that type of event happens, if it's declared an act of terrorism, we will pay the remainder. It's not going to happen all the time. That's why you get in Florida. That's why the homeowners insurance companies in Florida on these roofs are having so many problems, because they're having to insure. These companies would rather have a Cat 5 hit Florida tomorrow than pay out on all the hail claims. Reason being, reinsurance comes in and covers 75% of those claims on their reinsurance. So the insurance company is only paying 25% of it. They can handle that. What they can't handle is an epidemic of hail fraud where they have to pay out 100% of all these claims. So it's kind of like, it's the same thing, it's the same amount of volume as a hurricane would cause, but they're not prepared for it because they have to pay 100% instead of the 25%. And so I can circling back around, I can see the National Flood Program acting as a true reinsurer down the road. Will they do that? Time will tell.
All right. So everybody, thank you for watching and listening today. And remember, don't sacrifice your insurance coverage for a lower cost. The guys over there at Blanchard Insurance, you guys are really awesome. I have insurance with you guys, and they will make sure that you get the right coverage. When it came for me buying my house, I didn't go for what was the cheapest, which I'm very grateful that you guys advised me to go for the one with the better coverage. And that's what I recommend to everybody out there, to always go for the better coverage. Don't sacrifice your policy for the amount that you're spending, because if not, if I'd been in trouble and not been able to fix my house from the damage that happened.
Yeah.
So.
No, absolutely. And even a lot of I would say about 90% of the insurance agents out there don't really study the economics of insurance and what it's actually supposed to do. They just basically sell, it's so commoditized. Hey, I'm just selling cheap, getting you the lowest rate possible. And that's what the general 90% of the general consumer, if they're talking to that 90% of the general consumer base, they're teaching them the same mindset. If any consumer out there or agent or whatever, realtor, whatever, go online, buy Cliff Notes on the Economics of Insurance 101, 80-page, take it home, read it. You will be amazed that everything you think about in insurance is pretty much backwards. You're not really thinking about the economics of it. Where like Nick, when we explained to him buying the policy and how unfortunately he had the claim, But fortunately, he understands the economics behind it now, where it's kind of like, hey, I paid a premium up front. I had a pretty significant loss. And the value that of the premium compared to the loss I had, drastic. The premium, I'm happy to pay that any day. I would have probably been, economically speaking, I would have probably been happy to pay 3 times that with the amount of coverage I got out of that at the end and was made whole again. And that's the tragedy in this country, that people don't really understand the economics of it. But again, yes, always give us a call. We here at Blanchard like talking about subjects like this. We will talk to a client about anything. And realtors out there too. We were just having this conversation earlier when I was telling my team I was going on the podcast, what would you like realtors to know? They said, call us on our cell phones, whether you work with somebody like Jason, Haley, Andy, Mark, whoever. Call us on the weekends at your showing. Put us on FaceTime. If you have a question about a roof, if you have a question about a electrical panel, if you have a problem about plumbing like Nick, if you have a problem about anything in the house, and if it's going to cause an insurance issue, they said call them 24/7, even on the weekends. They're happy to just talk to you about it and fix the problem there, because they go, look, after we bind coverage, we send it off, they do underwriting, look at inspections. The insurance companies can always come back. So it's better to be prepared, use it for negotiations. And you may actually take a look at the house and say, look, after, Mike told me all these things are wrong with it, I'm going to have these problems with insurance down the road, and I'm going to have to fix it regardless. If I can't negotiate this price down, maybe I want to pass on this house. And we've seen a lot of deals fall through because, hey, well, I'm not shelling out $50,000 to replace a tile roof, and I'm not going to replumb the house. Why would I buy that house in the first place? So again, lean on us. You're not bothering anybody. 24/7, 365. You guys have our cell phone numbers. Call us.
All right, Mike. Thank you for being on today. And
absolutely,
yeah, everybody, we'll get a loan or mortgage broker on here sometime so we can talk about the escrow in terms of insurance and the loan and all that stuff. That sounds like a good topic. So
yeah, absolutely.
All right, Mike. Thank you guys, and thank you everyone for listening, and thank you over there, Blanchard Insurance. Mike, you have a great weekend, and I'll talk to you soon.
Sounds good.
Take care.
Thanks, everyone.
This has been Home to All, an all-inclusive real estate podcast. Find Nick on Facebook and Instagram at downtown.expert, and also his website, www.downtown.expert, or call or text him at 407-508-8809. Thanks for listening.
Don't spend hours or days looking for your new home. Let a downtown Central Florida expert guide you. I'm Nicholas Acosta, and I'm here to welcome you home. Being a Florida native, I know how exciting, stylish, and convenient the downtown lifestyle can be. From the nightlife scene in the heart of downtown to the natural beauty of Florida. I'm Nicholas Acosta, and I'm here to welcome you home.